Hello, everyone. Welcome to today's webinar on how to comply with the new FinCEN beneficial ownership rule. Today, we'll have speakers from Renee Allred as well as me, Matt Lau. But before we go there, let's start with some quick housekeeping before we start. You should only keep one BrightTalk session browser open, or else you may have echo. You may ask questions in the question box, but we will either answer it live at the end of the presentation or through email if we run out of time. This live webinar is recorded, and you will receive a URL link notification. And please rate and suggest improvement for our content for the next webinar series. Here is just a standard safe harbor statement saying this is all informational purposes. And now let me introduce Renee Allred. She has 28 years of banking experience, and in her former role as Assistant BSA AML Compliance Officer at a large-size credit union. She is an AAP and also earned her CAM certification, as well as a Certified Compliance Officer designation from NAFCU. Renee was a member of the Faster Payment Task Force for the Medium Financial Institution segment, which assisted in the development of criteria for safe and fast payment solution for the marketplace. She also participated on the Federal Reserve's Retail Payment Advisory Group.
Thank you, Matt, and I'd like to thank everybody for spending part of their day with us today.
And I'm Matthew Lau. I'm a product manager here at Guardian Analytics. I also previously worked at various financial institutions of various sizes, and I'm also the host for today. So what does Guardian Analytics do? We are in the business to detect fraud and money laundering. We help fraud teams stop fraudulent account activities and AML teams stop money laundering activities to protect their institution and comply with regulations. What are our achievements? We have today about 450 financial institutions as customers, protect 40 million commercial and retail account holders, and monitor over 5 billion banking activities per year. And this is the agenda for today. Renee will start talking about the processes. I'll talk technology and conduct a short demo. And Renee and I will both do a Q&A at the end. Now, before we begin, I know you have an AML system, you have processes in place, you have technology in place, you have everything in place. However, the new FinCEN beneficial ownership law will affect the people, the processes, and technologies. For the most part, you don't want to keep adding people for every new regulation that comes because there's always so many regulations that come out every year. So the changes should be made either in the processes and the technology. So in the next 30 minutes, you may not need to replace your AML system, but there's something that can help extend your AML system. And now I'll let Renee speak on the processes.
Thank you, Matt. Let's start by highlighting the FinCEN rule changes related to AML. With the implementation of the new beneficial ownership rules, a fifth pillar is added to the AML compliance requirements. This new pillar adds the need for a risk-based approach to identifying account holders, including beneficial ownerships of legal entity customers or members. In a nutshell, this is where your AML risk assessment comes in, and we'll need to document your customer due diligence processes. For some background of the rule, on July 11th of 2016, FinCEN published the final rule, and it became mandatory for all covered financial institutions to follow by May of this year. Its goal is to strengthen compliance in identifying beneficial ownerships to further prohibit criminals in hiding ill-gotten proceeds and avoid appropriate reporting requirements. Transparency in beneficial ownership provides valuable information to aid financial institutions to assess risk and support law enforcement, tax, regulatory, and counterterrorism investigations. FinCEN defines beneficial ownership with a two-prong approach. The first prong defines ownership of 25% or more of interest in an account. The second prong defines who controls, manages, or directs the business entity associated with the account. A single account could have a total of 1 to 5 beneficial owners, with 1 individual for the control prong and up to 4 individuals defined under the ownership prong. With the new rule, the AML program requirements for each covered financial institution were amended to explicitly require financial institutions to implement and maintain appropriate risk-based procedures for conducting ongoing due diligence to include knowing and understanding the purpose of the relationship established by the customer or member, identifying and reporting suspicious activity by conducting ongoing monitoring of the account to ensure its state purposes and use is consistent with the activity that is occurring in the account, and also to ensure customer information is kept up to date and maintained for use in mitigating risk and reporting suspicious activity. Oh, let me go back, sorry. The legal entity customer is defined in several ways, including corporations, LLCs, limited partnerships, nonprofits, and business trusts. Entities that are excluded from the beneficial ownership definition include trusts unless filed with the Secretary of the State, as well as natural persons and sole proprietorships, as they are generally controlled by a single individual. When determining the definition of the account for purposes of identifying beneficial owners, follow the same definition used for your customer identification program and the information obtained for individuals during the new account opening process. This information includes the legal name, date of birth, address, and social security number or other government identification. A new account qualifies for the new beneficial ownership reporting if opened on or after May 11th of this year. Existing accounts are not required to obtain beneficial ownership information unless a triggering event occurs, such as if the entity were to open a new account on or after May 11th of this year and is defined as a legal entity customer. Financial institutions may choose to define their own triggering events for obtaining beneficial ownership information, such as when additional services as wires or ACH origination begins, or if any change to a profile is made, such as a change of address or phone number. If you're considering the filing of an SAR to be a triggering event, also consider the possibility of recurring filings required for the continued activity of which the beneficial ownership information would need to be collected every 90 days for the ongoing filing. FinCEN has provided some exemptions to the new rule related to beneficial ownership requirements, and they include banks and credit unions, investment advisors, and companies traded publicly in the U.S. A U.S. entity with at least 51% of common stock or equity interest held by a listed entity is also exempted from the new rule. Companies listed on foreign exchanges, however, are not excluded from the definition. Covered entities that open an account for legal entity customers that is a point of sale to provide credit products, including private label credit cards, solely for the purchase of retail goods and or services at these retailers up to $50,000 are exempted. Accounts set up to finance postage products, insurance premiums, or to purchase or lease equipment are also not included in this new rule. There are limitations to the accounts defined as exempted from the new rule. If the account is used for customers to make payments to the account or receive payments from a third party, it will not be exempted. Accounts that allow for refunds are also excluded from the exemption. A critical tool on obtaining, verifying, and recording beneficial ownership legal entities is through written procedures. FinCEN expects these written procedures to include what and how information is collected at new account opening and verifying the identity of beneficial ownership using risk-based practices. These should include similar elements of the customer identification program. This information should be obtained from the individual who is opening the account and not directly through the defined beneficial owner or owners. Covered financial institutions may identify beneficial ownership by either obtaining a certification from the individual opening the account on behalf of the legal entity customer, or by obtaining the information from the customer through other means, as long as the individual certifies the accuracy of the information. FinCEN provides a model form titled Certification Regarding Beneficial Owners of Legal Entity Customers on their website. Here's a visual example of a link analysis that helps better define identified beneficial ownerships. The example shows the relationship between 3 beneficial owners for 2 accounts and represents how a simple beneficial ownership can be defined and also identify account relationships in less than a minute. Here's a more complex relationship link analysis using the same 3 beneficial ownerships with 8 different legal entities and the makeup between them. As multiple accounts can have varying beneficial ownerships assigned, it's important to be able to easily and quickly identify these owners for accurate monitoring and reporting. These results can also be provided within a minute. I would now like to hand it back to Matt for a demo of the link analysis and how that can help with identifying beneficial ownership legal entities.
Thanks, Renee. Now I'll talk about the technology side of the business and how it can help you comply to the new beneficial ownership. Now first, let's compare a legacy AML system compared to a modern AML system in terms of KYC and beneficial ownership. One of the key benefits of the most modern AML system is the multi-channel link analysis and how it can help investigators become more efficient at identifying beneficial ownership, thereby leveraging this technology to not improve the people count. As mentioned by Renee earlier, you can see from the diagrams that you can solve those all in under a minute. The KYC should also indefinitely scale, where the user should be able to add as many beneficial owners as they want to the KYC, and it shouldn't cause any issues. And due to the link analysis and KYC scalability, the time spent to view all the beneficial ownership relationship would ultimately be reduced. And integration with any premium news providers or with API connection should be provided, where both systems talk to each other. Now let's focus on the most important piece of a modern AML system, which is the link analysis. Link analysis is actually an ancient tool used by FBIs mostly to identify suspects. However, these tools have become more and more readily available, and we see what it can be done with beneficial ownership. It's like the absolute perfect fit. It can uncover all the hidden relationships, follow all the transactions, review all the beneficial relationships, and review all controlling parties all in under a minute. Now let me jump into a live demo. Let's be very brief, just to show you firsthand what a link analysis can do. As you can see right here, we have an institution, that's a financial institution that generated an alert with an account number right here. Now, if I want to see more information about this account number, all I have to do is open it up, and I see a bunch of transactions, as well as signers and controlling parties right here who are also signers. We can see that the customer here is, in this mock data example, is called Suite P, and we have the CEO person here and the COO. These are quickly identified in one click. If I want to see information regarding to the CEO, it's just an extra click here, and I can see their address, their IDs, and maybe a second address right here. And if I want to see beneficial ownership examples here relating to Suite P, I want to see who owns this business. I can see that there's 3 other businesses right here that has ownership in Suite P, 30%, 40%, and 30% respectively. And I can open this up and see additional ownerships here. I can see there's another business right here. Now, as an investigator, I might think, okay, maybe these are all just shell companies. Who is the ultimate beneficial owner? And that's ultimately the drill that we want to drill down to. And we can keep expanding this. This seems to be owned by another business. And ultimately, we do identify one person here that owns 40% of this third company that owns Sweet Pea, as well as another business here, which potentially is owned by 2 other people. This is what link analysis can do. In one click, in a couple clicks, you can see all these beneficial owners that otherwise you would have needed a bunch of paper to connect, and you might get error along the way. And looking at these examples, if you want to drill down to these other 2 examples, I'll just show you really quick how it looks like. So that's another person down there and another person here. You can see it gets really complex. And this is actually a very simple ownership structure that we see from our customers. There's definitely way more complex ones, but for the demo purpose, we show a simple one, which even as simple as it is pretty complex, as you can see with all these different nodes. And just how deep down you have to drill sometimes to view all the beneficial owners. And this can be done instantly. Now let me just switch back away from the demo. So in summary, if you don't have an AML system, then Guardian Analytics can cover all your AML needs. But the likelihood is many of you already have a legacy AML system. And you can contact us for a demo of Evidence Lake to see just how it can complement your current AML system. We know that you have invested millions in your AML system already, and we just want to show you how Evidence Lake can extend your AML system that is better and faster than your current legacy system. It should be noted that Evidence Lake is also a data lake, so it's very easy to deploy. Now, to learn more about Guardian Analytics, we have a set of webinars on Bright Talk. Our website also have a white paper, which you can go to for more details on our product. We have a few upcoming events, one at NAPQ, which is a BSA seminar on August 12th to 15th. Another at the WBA Technology and Risk Seminar on October 2nd and the 5th to the 5th. And an ABA Financial Crimes Conference from December 2nd to the 4th. Now I'll open it up to the Q&A. Let's see, I'm looking at this list. There's quite a lot of questions. I'll just go through from the top to the bottom. So is beneficial ownership for foreign entities still 25%? Renee, I'll hand this to you.
Okay, thank you, Matt. The requirement for foreign entities is still 25%, but financial institutions can decide to lower the percentage if it feels it needs to. This can also apply to domestic entities as well. Everything just needs to be documented in the written procedures. We have seen beneficial ownership for foreign entities at financial institutions that are at the 25% threshold or as low as 10%.
Okay, and at the second question I'm reading, what other information can be displayed in the link analysis, and what is shown than what is shown at first? So any information that is provided to us can be shown in Linkable. The most common sources of data that we get are core system from the core data from the core system, as well as KYC data. That way we link all of these together. Other linkable attributes that can be linked are like IP addresses, which was not shown in the mock data, but we can link anything as long as the data is provided to us. My third question I'm looking, how far deep do we dig down on the legal entities for beneficial owners? Renee, you want to tackle that one?
Yeah, thank you, Matt. You need to dig down as deep as needed until the ultimate beneficial owner or person is identified. The information only needs to be collected if they own 25% or more. But keep in mind the controlling party information needs to be collected for the initial legal entity.
Thank you, Renee. Another question that I'm reading right here. At my institution, a trust owns 50% of the legal entity. How do beneficial ownership collection work here? Renee, I'll also send this to you.
Okay, thank you. As the owner here is the trustee, the information must be collected from that trustee. If there are multiple trustees or co-trustees, only one trustee who owns 25% or more is required. However, the best practice is to collect the information for all the trustees on the account.
Thank you, Renee. The next question I see is, will this presentation be made available for printout after this webinar? The answer is yes. Another question I see is, will links show circular references if a business account, person, etc. appears more than one place in the links? How is it highlighted? In a case where a person or a business show up more than once in the link analysis, it just connects those additional nodes to that link. So every business account or person only shows up once. If there's other links connected to that person, it's all going to be connected to that link, and that's how you see all the linkage. Another question is, if I want to print the link analysis either as a PDF or as a paper, is that possible? As a paper, as in paper form is what I'm assuming. Yes, it is very possible. The graph will actually resize to your paper size or your PDF size as long as the user has access to it. How Evidence Lake work is every step has a permission. Every user is given a role with a certain set of permissions, which is configurable. And to print the link analysis, you need to have the permission to print it. And if you do, it's allowed. There is actually quite a lot of questions right here. I don't know if we can get to it all. But this concludes our webinar. And for all the questions that we don't get to, we will send out emails to respond to it. Thank you, everyone, for attending this webinar. And thank you, Renee.
Thank you.